Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate finance to see what is really going on. And let me tell you, Outdoor Holding Company's latest report has quite a few layers to uncover. It is like a financial onion with some spicy legal filings. Today we are diving deep into Outdoor Holding Company's quarterly report, a 10Q filing that covers the period ending the 31st of December 2025. It is a peek behind the curtain at a company navigating some big changes, from selling off a whole business to settling some serious legal drama. If you appreciate getting straight insights from these dense corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where you can join the conversation. So, what is the big picture here? Outdoor Holding Company, formerly known as Ammo Incorporated, is now primarily focused on its gunbroker online marketplace, a platform that is pretty crucial for the firearms and shooting sports world. They make money from fees on listings, services, advertising, and shipping. Big news. They sold off their ammunition manufacturing business in April 2025, which really shifts their focus. Let's jump right into the numbers because that is where the real story lies. Looking at their balance sheet as of the 31st of December 2025, they had about $70 million in cash and cash equivalents. That is a pretty big jump from about $30 million at the beginning of their fiscal year. This boost is largely thanks to the $42.9 million they got from selling off that ammunition business. So financially, they've got more wiggle room now, which is always a good sign. On the flip side, their accounts receivable, the money customers owe them, actually decreased. As of the 31st of December 2025, it was just over $9 million, down from about $10 million in March. This could mean they are collecting money from customers faster, or maybe just selling less on credit, which is generally a positive sign for cash flow. Overall, their total assets as of the 31st of December 2025 stood at roughly $271 million. This is down from about $297 million at the end of March 2025. The decrease makes sense given they sold off a whole chunk of their business, their ammunition manufacturing operations. So, the company is smaller now, but hopefully it is a more focused and profitable smaller company. Now let's talk liabilities. Their current liabilities, the debts they owe within a year, came in at just over $20 million at the end of December 2025. This is a significant drop from about $62 million at the end of March 2025. That massive reduction is likely tied to selling off assets and settling some of the old liabilities associated with that business. Interestingly, they have about $220,000 in current notes payable to related parties. This signals ongoing financial dealings with individuals or entities connected to the company's management or major stakeholders. Moving over to their income statement, the picture gets a bit more complex. For the 3 months ending the 31st of December 2025, they actually turned a small profit of about $1.5 million. That might not sound like much, but compared to the same period in 2024, when they lost over $26 million, this is a massive improvement. But when you look at the 9-month period ending the 31st of December 2025, they recorded a net loss of about $5.1 million. This contrasts with a much larger loss of almost $56 million in the same period of 2024. So the trend is definitely moving towards profitability, which is great to see. Their net revenues for the 3 months ending the 31st of December 2025 were about $13.4 million. This is a modest increase from about $12.5 million in the previous year. For the 9-month period, revenues were around $37.2 million, a slight bump from $36.8 million in the prior year. It is not explosive growth, but it is stable. So that is something. Their gross profit, which is revenue minus the direct costs of providing their services, was about $11.7 million for the quarter. This shows they are making decent money on each transaction processed through their marketplace. Their gross margin remains quite strong, around 87%, which is impressive. Now, let's talk about expenses. Their corporate, general, and administrative expenses for the 9-month period were about $13.4 million. This is significantly down from over $40 million in the same period a year earlier. A big chunk of that decrease seems to be from legal fees and settlement costs related to that big Delaware litigation we talked about. In their cash flow statement, the sale of those ammunition business assets brought in over $42 million. This inflow was crucial for shoring up their finances and giving them the flexibility they now have. This report is quite heavy on legal matters indeed. It seems they settled a significant lawsuit with Stephen F. Irvin, their current CEO, which was filed back in 2023. The settlement involved issuing warrants and issuing promissory notes worth a hefty sum, around $51 million in total principal. They recorded a settlement contingency of nearly $30 million in the prior fiscal year, and now the details of those notes and warrants are laid out, showing how they are being paid off or accounted for. It is complex, but the settlement seems to have cleared the air on that front, allowing the company to move forward. Speaking of warrants, they issued a significant number, including warrants to purchase 7 million shares and another 13 million shares. These are essentially options to buy stock at a set price, and when they are issued in settlements like this, they can have a real impact on future stock dilution and the company's stock price. It is important to keep an eye on how these are exercised. And another expense to watch is stock-based compensation, which was about $1.2 million for the 9-month period. This is less than the prior year, but it still represents a cost of doing business, rewarding employees and executives with stock. They also settled an investigation with the Securities and Exchange Commission. The good news here is that no civil penalties were imposed. However, the SEC did require the company to engage an outside consultant to review and improve their internal financial controls. This suggests there were some pretty significant issues with how they were accounting for things, especially around stock compensation and disclosures. They have definitely been working hard to fix these control problems. So, what is the overall picture for Outdoor Holding Company after looking at this report? They've clearly made a major strategic pivot by selling off their manufacturing business and are now betting heavily on their gunbroker marketplace. The improved financial results, especially the shift from a huge loss to a small profit in the recent quarter, are encouraging. They have more cash on hand, and their operating expenses seem to be coming under better control, largely due to shedding those legal battles and the ammunition business. However, there are still risks. The company has a lot of outstanding warrants, which could dilute existing shareholders' ownership stake. Plus, the settlement with the CAC points to past issues with financial reporting and internal controls that they are still actively working to fix. This could mean ongoing costs and the potential for future hiccups. On the plus side, a strong marketplace like Gunbroker has a lot of potential for growth, especially with new features and integrations they are working on. They are trying to streamline their business and focus on what works. In conclusion, Outdoor Holding Company is in a turnaround phase. They are leaner, more focused, and seem to be on a path to profitability, but it is not without its challenges. Investors will want to watch how effectively they manage their remaining liabilities, integrate new platform features without disrupting revenue, and continue to build trust after those past accounting and disclosure issues. It is a situation to watch closely. Alright, that is our breakdown of Outdoor Holding Company's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.